Hey, what's going on, everybody? It's Marshall back with Bids and Offers, and today I took a stop loss on the S&P 500 futures, getting in the market long right here at these 37s for a 66.50 target. And truthfully, this setup, I should have had a slightly different positioning, and I'm going to get into that in a second. I'm going to show you exactly how the trade played out. I have a screen recording of the trade, how I confirmed the trade using the order flow, the tape, the chart levels, technical analysis combined with tape reading in order to figure out where the volume is being transacted in the market. I'm going to show you my full thesis on this trade, including the higher time frame picture and my thought process on joining the buyers early morning after seeing that this gap got filled and the buyers defended the dips. Here's my execution. You can see I bought one contract at the 37.75 and I got stopped out on that trade here just under these 35s. Before I get into the specifics of this trade, why it didn't work out and what I could have done better, go follow me on my Instagram at Bids and Offers. I post a ton of extremely valuable stuff on here, including trade recaps, informational pieces of advice for beginner traders. I document all kinds of order flow stuff, technical analysis, just a super valuable page to be following. I post a ton of stuff on here, and everything I post I make with the thought of what would I have wanted to learn as a beginner trader and how could I have helped myself years ago. Anyway, let's jump right into it. Right off the open today at about 9:30, the sellers are present. The market tries to pop up a little bit into these 66.40s and fails. The sellers are present all the way down to the 65.93s. So we actually got below the major 6600 level, and there was a gap fill level here at the 05s that also got filled this morning. So on signs of buying coming in above that gap level, as we can see here, the market popping up above those 600s and defending. I watched this thing rally all the way through the morning range, and then eventually the buyers popped it up above the previous high of day, which was sitting at the 66.36s. I noticed that's where VWAP was also sitting at that current moment. So I watched the buying pop it up above this high, and I noticed that there is a lack of transaction on the profile, on the volume here, right at that high of day price, at the 36.5. What this looks like on the book map is just offer getting aggressively lifted up into these 40s, the market pulling back and rejecting a move first right here at 10.05, 10.06, below these 35s. So now I know that the sellers are going to fail trying to get back beneath the 35s. Now the problem for me was that on this pop up here, I really wanted to be in this trade because the market had been ripping ever since the early morning after the dip got bought up at 600, and I just thought that we would continue ripping right up through this high, and that actually is what ended up working out and happening. But the problem was that I was positioned in a way where I was not willing to risk the drawdown that was necessary in order to keep the trade on. So I tried the market right here at these 37.75, right about here at 10.07. So I'm in the market here. My stop loss on this is at 34.75 right here at this price. So the problem with this stop loss is that it's not actually a great invalidation point for this trade. Now, typically, I would like to have relatively tight stops on a break and retest play of a high of day where I see the market pop up aggressively above that high and I see an area of low volume form. But right after that happened, we hung out in this area for a while, for about 5 minutes before smashing back down all the way down to these 32.75. I got stopped here at the 34.75. The true invalidation point for me on this trade would had to have been beneath this very aggressive buying that was able to pop the market up through these 31s and 32s into that high of day. If I'm executing off of the order flow, confirming my trade with the order flow, I need to have an invalidation point that is also confirmed with the order flow and legitimately takes me out of the market for the least amount of loss at the very best price. I risked 3 points on this setup from the 37s to the 34s, and truthfully, my stop should have been beneath these 31s, beneath this aggressive buying that popped the market up through that previous high. Because if I knew that selling could come in beneath this level and persist, that is where I should really step out of the trade and let the sellers continue to drive the market down. But that's not what I did. I had my stop in an area of liquidity right in here where these bids were sitting, right where the sellers failed last time. It should have been slightly lower. Now, yes, I got in at the 37s, so am I going to want a 7 or a 6 point stop going for a 13 point target to the 66.50s? No. That's unideal. That is not a good risk to reward ratio. I strive to get paid at least $3 for every dollar of risk that I put on. So that means if I'm going to risk 3 points on a trade, I want to make at least 9. So if I had a 7-point stop, that means that I would have had to have a target of at least 21 points in order to feel comfortable with the risk that I was taking to keep that trade on. So what I should have done in this scenario was scoop the market up somewhere in here if I had gotten another confirmation of a failed pullback. Now, like this pullback right here, obviously you can't know that it's going to happen until it does happen, because I got long in here and then it just kind of slipped on me. But this second pullback failing right at this area where buyers supported to push the market up through that high into that new high of day just below the 40s here, at the 40s, this would be the optimal area to have tried the market again, or have tried it in the first place for me. That way I could be in the market here at these 34s and 35s and have my stop at the 30s for a 4 or a 5 point stop and be very well protected on the trade and have my stop at an actual point of invalidation. My stop on this trade was just simply too tight. I'll show you what it looked like right here on the candlestick chart. So we pop up, I get long right here where my cursor is at 37 3/4. The market consolidates for a little while and then it drops right beneath this VWAP. It fakes out the VWAP, it takes my liquidity right there, and then starts to rally back up right towards my 50 target. The invalidation point on this trade should have been inside of this high volume node right here, at least below 32. The market did pull back to 33. If I had had my stop in here where the last large area of transaction took place, I probably would have been able to stay in this trade and have had my stop in an actual area that invalidates my idea. You can see that the trade idea worked out. It's just that I was in at a weird area and I didn't have my stop in the right area. So the break and retest of this level did end up working out. If you could have gotten long in here somewhere on that second confirmation of selling failure, and then you put your stop right underneath here or underneath these bids, that's a really solid re-entry. That's a really solid opportunity there. It's just that, sometimes your positioning isn't that great. In the moment, what it looked like was this. The market's popping up, it's popping up. I see these dips that are holding. We pop up again. It's 10:07. I try it long, like right in here. What does that look like to you guys? That looks like the market's going to rally. This sell-off failed right here, and I try it in here. And truthfully, my stop should have been down here at these 31s or 32s, somewhere beneath these 32s to really invalidate these buyers, right? Because if the market is beneath this entire area of aggressive buying, that invalidates them, and they are now all underwater. That is a great area for me to cut my loss and get out of the market. But I actually ended up having my stop dragged up, and that's what caused me to get taken out of this trade prematurely before it ran. I wanted to make a video about losses and about trades that didn't work out. So this is actually a great example of one of those trades. Really solid context, really solid confirmation, and simply just being positioned a little awkwardly and not being able to stay in the trade for the profit that could have been taken up here. I mean, this thing ripped all the way from all the way from the 6500s all the way up here into the 6700s later today. I have a screen recording of this trade. I started recording this right after I hopped into the market, so I'm going to speed it up for a little bit for you guys, and you can see exactly what happened. So I hop in, this pop-up kind of fails here a little bit. I was kind of speculating that the buyers would be able to pop it up again, but look, I get stopped right there on that flush through that level, and look at what happens. The buying comes right back in again. We get some bids that pop up here, like this bid pops up, I think like right in here, and then the market starts to aggressively rally up. And you can see that that thesis held true. It's just that, I wasn't positioned correctly on that. Look, again, right here, you can see that I have my stop right there, get flushed, and then it pops back up on more aggressive buying, and then eventually it just starts running. I take these trades every single day inside of the live trading room. The link to join that is going to be in the description of the video. It's a really, really solid resource for beginner traders to start to understand what drives price action to begin with, and how to read the tape and how to read the volume that is actually driving the changes in the quotes that we see on all of our brokerage platforms. It's not an ICT strategy. It is literally looking behind this price action like this on this chart, and you're going to be able to learn how to read all the orders that come in behind that and be able to properly position yourself in the market with the larger participants that have a lot of money on the line and really want to see their accounts green. I'm also dropping an order flow trading guide very soon. I'm just finalizing some things in there right now. For everybody that's on the wait list currently, you guys are all going to get a whole bunch of bonus stuff down the the road for being patient with me on this release. I'm just trying to get everything finalized and looking good. For those of you who are not on the waitlist, the order flow trading guide is currently discounted. If you join the waitlist now, you'll get a bunch of bonus stuff down the road from me. It's going to have topics from risk management, basic technical analysis, advanced technical analysis, tape reading, understanding the depth of market, understanding profiles and how they form, what a low volume node is, what a high volume node is. And most importantly, I go over my exact trade playbook in the order flow guide so that you can see exactly what goes into every single setup that I look for on a day-to-day basis. You're going to learn how to spot the exact same things that I spot in order to take trades to get paid over 2, 3, 4 times my risk. Pairing that guide with the live trading room will freaking supercharge your trading performance and the experience that you gain inside of the market. I promise you that it will take months, if not years, off of the learning curve for you. But that's it for me on that. I just wanted to go over this trade. It was a solid idea. The trade ended up not working out, but the idea did work out. And the thing that I want to end off this video with is just because you take a loss on a trade doesn't mean that you have to ditch that strategy. That strategy works if you know it works. If you have had trades in the past that do end up working out, and you know that there is some logic to the strategy, and you have confidence in your ability to capitalize on those setups, sometimes you have to just understand that setups don't work all the time, and you might just have to take an L. And you might have to realize that maybe your stop was too tight. Maybe you risked too much. Maybe your target was too small. You know, there's a lot of nuances to it, but I see people saying, oh, I need to switch my strategy. I need to switch my strategy. I need to go learn ICT. I need to go learn how to incorporate this other thing and then back it up with this and then do this and that. Keep it simple. You don't need a whole lot of stuff going into your thought process to put a trade on. You just have to have things that are repeatable on your charts. Okay, this is a break and retest. Look at this confirmation here. We have absorption on the footprint. Number one, you have to focus on repeatable things. If you're trying to go for home run trades that only show up once in a blue moon, you're not going to make it as a trader. You have to find ideas and opportunities that present themselves often enough for you to remain focused in your effort of finding them and also being able to execute when they do show up. Trading is a matter of sitting on your hands and knowing what to look for and being patient when it is presented to you. Just because a trade doesn't work out, or just because you might feel like you don't have a whole lot of confidence in your approach, doesn't mean that you have to throw your entire process away. Just find out what's not working, find out what might be happening, common characteristics of losses, or of trades that don't work out the way you want them to, and start to look at your data. Once you dissect that data, you're gonna know what you need to improve upon as a trader and in your strategy in order to tweak a couple things and then see profits or see lower losses. Being a good trader is all about being malleable and showing up every day and knowing that you're gonna have to constantly put that work in and fine-tune your approach and adapt to the market as it changes. I'm going to end the video on that note. If you took something away from this video and you found value, drop a comment down below. Make sure to subscribe to the channel and follow me on my IG. I'm here to just drop sauce and show you my trading journey, the trades that I take, and I hope that I can help you as a trader. Thank you for watching. I hope you have a great night, evening, day, and peace out.